Really quickly, I wanted to go over how I evaluate momentum whenever I'm in a scalp. I've had a few people ask me how I move my stop losses and things like that. So today I'll be going over that really quickly. But if you want to follow along, it is on the October 10th messages where we did the short from like 470-ish down to about 400. So it was on October 10th. But let's see. Right, so everything I do is pretty much based off of previous price action. If you pay attention to my messages in the journal, then you'll see that I always mention pattern recognition. So where that comes into play is really just from the previous couple trends. So if I'm playing on the 30 minute, then I'll be looking at this downtrend and then right this kind of uptrend. Uh, the way I move my stop losses is I really just identify where most of the candles are rejecting, right? Where most of the candles are rejecting or most of the candles are kind of bouncing at. Right? So if I do it really quickly here, then we can kind of see that most candles here, right? It is very pretty obvious that the 2460 area is a very significant level for prices. Like especially if we draw this box around. Um, a lot of times trends stop here and trends begin here, right? Uh, there's a lot of violent reactions whenever price comes up to test this area, and then whenever price exits, that's when price starts to move, right? So in the case of the short that we had on October 10th, right? One, right, this is kind of like a golden zone play, but it also lined up pretty well with this area right here. So in my theory was that if price cannot accept above this trend or above this range rather, then we would come back down to test the bottom of the range, right? I'm literally just playing inside of this box here. So between here and then between my fib level here. So fully expected us to kind of just do this, right? Test the top of the trend or top of the range, come down to the bottom of the range, and then vice versa until we get a high time frame close above or below. Right. That's kind of where my thesis of if we get a close above 44, then we're super bullish, or if we get a close below 340, 340-ish, we're super bearish. Uh, now I say 484 because right, there is some liquidity up here that we cannot just completely disregard, even though most price action lies within this area. However, if we keep playing it along, right, we kind of see that we did get a rejection. Now, we came down to my price target almost immediately, right? So, um, this isn't the greatest example of how I would play stops, but really everything is based off of the ranges identified. Right? So this is the first range, this is the second range, and then we have a little one like right here, but it's not too significant, right? Because this top of the range here coincides with this range here, which also coincides with this range here, right? So everything I do is okay, did one range break? Where's the next range? If that range is still held under, then I will move my stop loss to that point. Right. So in this case, let me go to a smaller time frame. Actually, I guess we'll have to go to the 5 minute here. So we can ignore the time frame here, and I just want us to focus on the candles themselves. Right. So we've kind of identified our ranges already. So something like this, right? Something like this, and then something like this. So as we move down, right, we kind of accept into this second range here. Let me move it over. So we kind of accept into this second range here, right, as we come down to test this 420 candle. So now all I'm thinking about is momentum, right? What will cease the momentum for us to keep going down? And that is the only thing that would stop our momentum from going downwards is if we close above the previous range. So if you can kind of imagine the thought process during this candle formation, we come down to our pretty much my main price target of 400, which is the bottom of the range here, as well as the negative 236 of this golden zone play. So when we came back up and closed above the previous range, right? So this is range three, and then let me number the ranges, right? So three, two, and one. So we broke range one, came down to range two. So now my stop loss is range one, right? Any 5 minute close above range one. I'm saying 5 minute because that is the time frame I'm playing on, right? So any 5 minute close above range one, as we come down to range two, will be my stop loss. Now that we broke into range two, um, and we're coming down to test range three, my stop loss now moves to range two, right? So any 5 minute close above range two, then I will exit my position. And you can kind of see the pattern here. Um, we came down to range three, which was my main price target. So I exited some of my contracts. And then we came up and closed above range three, right? Because we already met range three, I stopped out of my position. Now, as you may notice, you will never, um, using this method, you will never completely mark the top or or capture the entire move. Right. But that is not the point of this method. The point of this method is to be able to ride the momentum down without selling too early. Right. Because if you think about it, the reason why we or the reason why I move my stops as ranges are broken is because theoretically, if price were to come back up to the previous range, then the psychology behind that for price means that there's so much momentum lost because you've eliminated the two kind of levels that you already broke through, right? So this is a pretty exaggerated example where price kind of retraces two ranges at once. Usually, this doesn't happen. This almost never happens on high time frame. But because we're on such a low time frame and volatility is incredibly heightened, right? You'll see these kinds of candles uh, not commonly, but it's not uncommon, if that makes sense. Right. So the main goal of me moving my stops the way I do and taking profit the way I do, again, is not to capture the entire move. Sometimes I capture the entire move, but that kind of relies mostly on Elliott wave. But that is a topic for a different time. The main thing I want to focus on is how I exit my scalps, and all of my scalps are based on momentum. Right. So because momentum is lost when we close above the previous range that we broke, then right, then I just exit my position. Right. Uh, so hopefully that kind of explains how I manage my stop losses. It is totally different on high time frame. Actually, I wouldn't say totally different, but it is much more reliant on uh, what pattern is forming on the higher time frame, and that comes from Elliott wave. Now, on the lower time frame, I don't think Elliott wave matters at all, because the odds you are correct is like near zero. But anyways, hopefully that explains why I move my stop losses the way I do. Um, I will see you guys tomorrow for some Monday trading. Bye for now.